Come on, how do you protect your retirement money? If you still swipe a debit card, you are handing criminals direct access to your actual cash, not a credit line, not a pending charge. One skimmer at a gas pump can drain your entire Social Security deposit before you even see it. A 67-year-old lost $1,620 overnight. Banks get 10 business days to investigate, sometimes 45. Bills don't wait. Stay with me. Here is the problem. Most retirees believe fraud protection will save them, but a debit card is not a shield. It is a direct pipe into your checking account. Banks earn swipe fees every time you use it, so they have no reason to warn you. The real question is, what actually happens during those 10 business days? Let's follow the money. Start with the legal machinery already stacked against you. Under the Electronic Funds Transfer Act, if you report debit fraud within 2 business days, your bank caps your loss at $50. Wait longer than that, and it jumps to $500. But those caps are meaningless after the thief gets there first. The real damage happens in between. Here is the timeline your bank does not advertise. A skimming device at a gas pump reads your card. Criminals clone the magnetic strip and use that clone to drain your checking account at an ATM across state lines. The bank now has 10 business days to investigate. In real life, 10 business days is 2 full weeks. If the bank cannot finish, it can legally extend the investigation to 45 days. And even if a provisional credit eventually appears, your mortgage payment and utility bills have already bounced. This is not hypothetical. In 2025, FICO found more than 243,000 debit cards were compromised by skimming, a 5% jump from the previous year. And here is the part that should worry you most. Seniors are the preferred target. An 80-year-old fraud victim reports a median loss of $1,300, but the actual damage is usually worse, because a retired person does not have a fresh paycheck to cover the gap. They have Social Security, they have savings, and they have bills that do not wait for any investigation. So why don't banks fix this? Because debit cards make them money. Every swipe generates a swipe fee. Every fraudulent charge that overdraws the account generates an overdraft fee. Every missed payment generates a returned payment fee. In 2019, Congress rolled back rules that would have capped overdraft fees at $5. The system is not designed to protect your cash. It is designed to move your cash, and that leads to the brutal fact. The money you are trusting to keep you safe is not safe at all. Wait until you see what a skimmer does in the 90 seconds it takes you to pump gas. 90 seconds is all it takes. A skimmer fits over the card slot at the pump, thin enough that you won't notice it. It reads your card's magnetic stripe the moment you insert it. A hidden camera above the keypad records your PIN. Before you put the nozzle back, a criminal on the other side of the world has your full debit card data and your personal code. That data becomes a cloned card in under an hour. Now follow what happens next, because this is not about the thief. This is about the 10 days after the thief is gone. A 67-year-old retiree receives $2,071 in Social Security on the 3rd of the month. She has a mortgage payment of $1,012, a utility autopay of $146, and an insurance debit of $98 scheduled to clear that same week. On the 4th, a cloned card hits an ATM in Atlanta and withdraws $1,620 before the bank slows it down. By the time she notices, the checking account is empty. Here's where the story turns. The bank tells her the fraud is under investigation, but her mortgage payment still goes through the next morning. It declines. The utility company also declines. The insurance company declines. The bank does not pause her bills. It charges her a returned payment fee for every single one. The mortgage servicer adds a late fee. The utility adds a reconnect fee. So the real loss is not just the $1,620 taken. It is the $1,150 in fees and deposit requirements now stacked on top. But here is the assumption that collapses next. Most people think checking their balance protects them. It does not. Checking your balance only tells you the crime already happened. Fraud protection does not stop the money from leaving. It only starts a dispute process after your cash is already gone. That is the difference no one explains. With a credit card, the bank is using its own money. When fraud hits a credit card, you report it, and the charge is frozen. Your bank account never moves. With a debit card, the bank is using your money. The instant the clone is swiped, your balance drops. The bank has no urgency because it is not their cash at risk. They still collect the overdraft fees from the chaos. And what about those zero liability promises from Visa and MasterCard? They are voluntary bank policies, not federal law. If a thief uses your PIN, some banks argue you were negligent. With a credit card, the Fair Credit Billing Act guarantees your maximum loss at $50. There is no equivalent guarantee for debit. It is whatever the bank decides, and that is not a bug in the system. It is the business model. Banks earn billions in swipe fees every year from debit cards. When Congress rolled back the $5 overdraft cap, they made it easier for banks to profit from the exact moment your account goes negative. A skimmer creates that moment. The bank does not lose. You do. Now consider the final twist. You may be sitting there thinking, I don't use my debit card online, so I am safe. That is the most dangerous assumption of all. 243,000 compromised debit cards last year were not from online hacking. They were physical skimmers on ATMs and gas pumps. The threat is not somewhere in the cloud. It is in your hand at the pump. The question isn't whether skimming will happen. It's whether your account will survive when it does. And the answer depends on one decision you make before the next time you fill your tank. Before you make that decision, you need to understand the full scope. Skimming is not only a gas pump problem. In 2023, debit card skimming grew 96% year over year. Bank ATM compromises exploded 90% in a single year, rising from less than 20% of all skimming incidents to 35%. Your local bank branch ATM is now a primary target, not just sketchy gas stations. The machine you trust at your own bank. And the technology has evolved. Old skimmers were bulky devices glued over the card slot. Modern skimmers are thin as a playing card and inserted so deep inside the ATM that you cannot see them from the outside. Some are so advanced they use a second chip to intercept your EMV data. The card never even leaves your possession. The theft happens while you are standing right there, but the escalation doesn't stop at the machine. Organized crime rings buy skimming data in bulk. One cloned card can be sold multiple times. Your account might be drained at 3 different ATMs in 3 different states within minutes. The thief doesn't need to be anywhere near you. They can be in Georgia. You can be in Oregon. The bank sees that and still takes 10 business days to verify your fraud claim. Then there is the assumption that seniors are not targeted because they have less money. That is exactly why they are targeted. 40 years of savings, a fully paid house, excellent credit, lower daily transaction activity, so the fraudulent withdrawal stands out less. And if a senior has not checked email for 3 days, the operation has more time to work before anyone notices. Here is where it gets worse. The bank's fraud algorithm often misses the first ATM withdrawal on a cloned card because it looks like normal card use in a new city. Maybe you are traveling. Maybe a relative borrowed the card. The system doesn't know. So by the time the algorithm triggers a block, the thief has already made 2 or 3 withdrawals. And if the bank sends a text message to a phone number on file, many seniors don't see it for hours. The delay is built into the crime. Now add the second-order consequences. The retiree whose account was drained also loses access to linked savings. Many banks automatically transfer from savings to cover an overdrawn checking account. So the fraud does not just hit checking. It bleeds your savings account as well. The bank calls it overdraft protection. You will end up calling it a second theft. And here is the quiet part. They don't say out loud. The bank is in no hurry to help you during those 10 business days. While you sit on hold, another customer is opening a new debit card account. Another customer is being charged a monthly maintenance fee. The entire system depends on your money moving. When your money stops moving, the bank's fees disappear. So the only person with urgency in this situation is you. And that is why the advice you have been given for years is completely wrong. Just check your balance regularly. Just don't use your card at sketchy places. Just set up alerts. That is all fine. But it doesn't stop a skimmer. It only tells you when the damage is done. You need a different kind of protection. One that doesn't rely on the bank to reimburse you after the fact. One that removes your cash from the battlefield entirely. The truth is simple, and it is unpleasant. If your debit card is attached to the account where your Social Security lands, you are putting your entire retirement income in the path of every skimmer in the country. There is a better way, and it is not complicated. It starts with one rule that changes everything. That rule is account separation. Keep the account where your Social Security lands completely disconnected from any card you ever swipe or insert anywhere. No debit card at all. No merchant exposure. Your primary account becomes a vault. Then open a second checking account with a low balance, maybe $300 to $500. Fund it weekly from your primary account, enough to cover small cash purchases. If that card gets skimmed, the thief can only take the $300. Bills still clear from your main account. Your life doesn't stop. For daily purchases, the stronger move is using a credit card paid in full every month. Under the Fair Credit Billing Act, your maximum loss for credit card fraud is $50, and you are not paying it while the bank investigates. Your own money never moves. You are borrowing their money. That's a different security position. Credit card issuers freeze the charge and keep you liquid. That's the entire game. But not all debit use is reckless. 4 places remain appropriate. First, use your bank's own ATM, not the random cash machine at the convenience store. Second, small businesses that don't take credit, but keep a separate low-balance card for that. Third, government or utility payments with a convenience fee, because some agencies only charge for card use. And fourth, places that offer a cash or debit discount. But every one of those transactions should run through the low-balance spending account, never the income account, and use a credit card for everything else. Then build the safety layer. Turn on real-time transaction alerts, so every single withdrawal buzzes your phone before you leave the parking lot. Lower your daily purchase and ATM limits to the minimum you actually need. Never store your debit number online, not on Amazon, not on the water company portal, nowhere. Review your accounts every few days, not once a month. And never, under any circumstances, swipe your debit card at a gas pump. Use a credit card, pay inside with cash, or use a mobile wallet where the pump supports it. The pump is the skimmer's favorite hunting ground. And here is the final surprise. Even if you do everything right, fraud can still happen. That's not the point. The point is the difference between a nuisance and a disaster. The retiree who uses a separated account and a credit card still gets skimmed occasionally. But her Social Security didn't move. Her mortgage cleared. Her life stayed on track. The crime was reduced to a phone call and a replacement card. That is the real payoff. You can't always stop a skimmer. You can stop making your retirement the prize. Run through it before the next time you leave the house. The checklist takes 15 minutes, but the change lasts the rest of your life. The wider lesson is bigger than skimming. We are living in a system that profits while you wait. Your bank is not going to warn you, so warn yourself. Warn your spouse. Warn the friend who still hands over a debit card without thinking. Because financial security in retirement is not about being wealthy. It is about making your cash hard to reach. A skimmer cannot take what you never exposed. If this shifted even one habit, share it with someone who still swipes a debit card without thinking. You might save them from a drained account and 10 days of phone calls. And if you want more straight answers about protecting retirement money, subscribe and hit the bell. We will keep exposing the parts banks quietly benefit from. Until next time, protect the cash before it is gone.